What's up, everybody? This is Jimmy with Trading Decoded. It is July 30th, 2024. It's 4:05 in the afternoon, and the market's closed. Today's chart gave us a very, very wide range of opportunities. We had almost a $10 range today. If you looked at the pre-market chart, it didn't look like we were going to get anything like that, which is awesome that we did get it. But for me personally, today, my first trade was a red trade. My second trade was slightly green, but I was still red on the day. Unfortunately, my third trade brought me to green on the day. We'll discuss what I did and why I'm glad other people did the opposite of what I did, which was trading the chart for what they were seeing versus what they thought was going to happen, right? So my losing trade today wasn't a massive loser. It was a 21.1% loss. But it hurts, right? It hurts, and it sets the tone for the day, for me anyway, on a more hesitant foot in, questioning whether I'm still making the right decisions. But let's go ahead and launch the chart and see what we had going on. So this morning, you'll see that there's only two pre-market lines here. That's because when I was trying to chart at 8:30 this morning, there was nothing to chart. I can comfortably and easily add our targets high and low. In fact, let me change this one to orange since we hit that one. But as far as pre-market levels go, I had nothing. So I wasn't ready or prepared to play anything, which is why I was trying to tell people to be patient and open and wait for something to tell you what the market may want to do. Okay, today was not the day to be aggressive on. Contracts were way more expensive than most of us thought they were going to be. The expected move today wasn't very big. They were expecting a $1.03 range today. Obviously, we got way outside of that. And IV was high. Now, I don't know if that's because we have FOMC tomorrow or what's going on, but nonetheless, it was expensive to play, and sticker shock for folks is a real thing as well. However, we got outside of our pre-market range. Now, all the way back at 8 in the morning, 8:30 this morning when we were actually charting, I was asked if you had to pick a call and put lines now, what would you say? And I said, well, I would have to go with if we got above 546.22 or below 545.54. Calls above that, puts below that. So I wouldn't have bought calls on the opening candle. I know because we opened above it. I don't like the idea of opening above our call line. And I believe Qs at the time were at resistance anyway. Yeah. So the Qs, we weren't looking to aggressively get in on the opening candle today. Number one, we don't like to play the call or put scenario if we open above or below the line. Okay. We play these with candle closes above or breaches above, depending on the scenario, or candle close or breach below. This morning, I didn't get in on the opening candle. Thankfully, I didn't get in on the next candle. But what I did recognize, and this is where I didn't feel bad about the spot I took. I felt bad about not getting out when I realized it was less likely to work for me. And that's the takeaway here. I noticed the Qs were struggling to move higher after a few minutes of rejections here. We quickly realized that Qs found a decent support right here at their pre-market midline. SPY had a decent support down here at their, well, I only have two lines, but the pre-market high line, right? This was a good support here. So what my plan was we were at resistance on SPY. We were at resistance on the Qs. I took my puts. Now, I wanted not a big move down. I wanted SPY to come down to its blue line or Qs to come down to, either its midline or just below the midline. I didn't get either one of those things. I had the opportunity to get out of that trade at the Q's midline. I held for longer, recommended to everybody, guys, this is a higher low on Q's. This is typically when we talk about higher lows are bad for puts, right? We always say that throughout the day. We got the higher low on SPY. We got the higher low on Qs. I could have got out of this trade with a much, much smaller loss. But I said to myself, you know what? I'm going to stay in it until the Qs close above this resistance. It was slowly moving up. I was watching the higher lows go in. Everything about this was telling me, Jimmy, this trade's not working for you. It's not working for you. Take yourself out of it. I didn't until we crossed this line. Stopped myself out of the trade. It was a 21.1% losing trade. Not the end of the world, but started the day red. However, many of our members recognized that SPY and Qs had developed a support level on this top blue line, and they bought calls when we breached this line, or they bought them off support like we should have done. Okay, so yes, there were people who made money on this trade. I was not one of them. And I even talked about it while I was in my losing trade. I said, guys, if SPY closes above 546.64, I expect it to go to 547.16. Just got to watch out for the pink line. So while I'm in a put losing money, I'm openly saying to myself, if this happens, it's likely to go up here. I stopped out when I should have been getting into the right position to the upside, and that was that. So congrats to the people who played the chart, who were patient, and you got paid. Now, to the downside, and there was a lot of it to go around. My thought process for calls was right. My thought process for puts started out right. I didn't take or accept the facts that it was likely not to work, and it turned into a losing trade. We hit up here, not looking for puts at this point. Very first thing we have to do is make sure that we're no longer trending up. If you're interested in buying puts again, make sure that you have room to go. We talked about this while it was happening, guys. Just because we broke the trend line, if that yellow line holds its support like it did the last time, is there enough room in this move from trend line to support to make any money? If the answer is no, skip the trade. Remember, you don't know what is going to happen. You don't know if we're going to close below that line. You don't know if it's going to hold and we bounce off and continue up. Right? Nobody knows. But the last time we tried to come through it to the downside, we couldn't. So I'm of the mindset that I'm going to trust the most recent attempt to do this. In this case, I would have missed a trade that ended up winning. I'm okay with that, because if that support would have held and pulled back, you would be buying at a horrible time for puts. And where is your stop loss going to be? Way too far away. It needs to be resistance. Well, the resistance off of this line is all the way up here. That's a massive pullback. That's going to be very, very, very uncomfortable. And if you make it to that point, you've probably already become a hold and hoper. Not a good spot to be in. All right. Now, when was I interested in puts? Okay. At 9:55. Several things were happening at 9:55. Number one, we were putting in lower highs. Number two, we finally broke this support of SPY's pre-market level. And at 9:55, Qs have also closed below with potential room to move. Okay, these are tight lines. This is a nice big opening. Okay, we closed below at 9:55 on the Qs. I'm expecting the Qs come down to this orange line. As you can see, we had alerts on both of those lines because that's where we're aiming to go in many of these trades. All right. We got through support on SPY. This was the entry. Now, this trade ended up being pretty uncomfortable. And it ended up being pretty uncomfortable because we pulled back. We stayed below our resistance. Like if we're buying in at this line here or down here, you've got to know where you're going to stop out at. And you always have to use price action as your stopping point, not a percentage, not a dollar amount. All right. So that's up to you. This might have been a little too aggressive for some folks. And the pullback would have been uncomfortable, but you trusted resistance. It held. We moved down from there. And that ended up being an okay trade, just uncomfortable time to get there. The next trade we were looking at was a pullback to resistance at 10:09. Okay, this was after the 10 o'clock candle. Now down here, some folks held through the 10 o'clock candle. I'm not a huge fan of that. In fact, I got stopped out of this trade for a small win. This ended up being a 9.9% win, which left me still red on the day. But I wasn't going to hold through 10 o'clock, and I certainly didn't want to get another red trade in a row. So I moved my stop into profit as we got through some of these lines, and I got stopped out with small profit, but not much. Then we get through 10 o'clock. The 10 o'clock candle drove us lower, putting a new low of day. Qs dropped down to their next support line. Awesome. We pulled back to resistance. Okay. We pulled back to resistance on Qs and on SPY. At this point, I think ADD was selling off at 10:09. Take a look at this. We had some aggressive movement to the downside by now. So to me, the market's starting to roll over to the downside. And it did that for the most of the day. I mean, until it started to trade flat and then slowly rotate to the upside. But fact of the matter was, momentum had shifted in the market from up to pinnacle to sliding down. SPY was already moving down. Qs were already moving down. So we're interested in puts. Now, we get in here. We get out here. If you're playing line to line, at this time at 10:12, I believe the Q, so at 10:09, the Qs pulled back to resistance. Okay. They treated that line of resistance as resistance for 2 candles. Third one we got in. Put in a higher low. Once we recognize there's a higher low at 10:12 or 10, shortly thereafter, the opportunity to get out of the trade. This is what caused me to lose more on this trade than I needed to. I stayed in puts when I saw a higher low in the first trade. I was just reminding people not to be me. Now, if you're in this trade, you've got resistances up here that you hope hold, and we were looking and hoping for a move down. I had my eyes set on this orange line for Qs. Okay, the Qs got to that orange line at 10:22, which would have been right here on SPY. Okay. So if you're playing line to line, you got in here, you could get out here. If you held through the pullback, you're hoping that resistances save you. Down here, why'd we stop at 10:19? Were we hitting a line at 10:19? Oh, this support right here on the Qs. We don't know if that's going to hold or not. We broke the uptrend. That's good. Came right down to support. We pulled back, lower high, and then the move brought us down to the orange line, which is all I was aiming for. That trade right there. So losing trade, small winner, decent winner. This guy right here ended up being a 42.9% win. So that saved my day. Wasn't a huge winning day for me personally, but I had a rough day today. I had a rough day reading the chart properly, and I think it started when my first trade of the day was red. However, the best trade that we called out today, before it happened, was one that I couldn't take because I'd already met my 3 trade limit. We had new people in our community. I was trying to explain to them when is the right time to consider puts again. I'm going to show you guys because we literally walked this trade through from start to the actual bottom of this, and everything worked out exactly how we would hope it to be. Now, as we did this in real time, I want to show people a couple of things. I don't know what the result of the reason for this trade to even be considered was going to be. Meaning, I don't know that we're going to end up all the way down here. Okay? I never take a trade with the expectation that we're going to get a $5 drop or a $3 drop or a $2 drop. I'm just hoping that we make it to our next target low. Okay? But this is what we're looking at in real time during the trading day. I'm being asked, Jimmy, when would you buy puts again? And I said, well, first we need to make sure that we're no longer putting in higher lows. This happens at 10:52. Does this mean buy puts at 10:52? Absolutely not. Just means that the reason we weren't even entertaining puts is now no longer the reason. Calls come off the table when we break the uptrend or we put in a lower high. Puts Doesn't have to be played just because we broke the uptrend, but the minute we put in that lower high, I said to everybody, guys, now there are two appreciating factors to consider puts. The last thing you've got to watch out for and be aware of is this support right here. We broke the downtrend or the uptrend. We tried to pull back, put in a lower high. I expect the support to fail, not hold. I would be comfortable getting into puts now. And as luck would have it, at the same time, at 10:57 on the Qs had just gotten below or getting up down to their pink line off of a lower high. Everything was lining up perfectly for this trade. And boy, was it a doozy. I held people in this trade. There was nothing to be afraid of on SPY or Qs. This trade ended up being the best trade of the day, in my opinion, okay, that I didn't even get to take because I'd already met my day trade limit for the day. And it was as clean could be. As we're moving down to the pink line, we blew right through it. That's not a time you get out. That's not a time you get out. If we close below that line in a downtrend, assume we're going to make it to the next support. Now, if you wanted to get down here and get out, okay, great. But at this time, I'm still saying to everybody, guys, Qs still have a long way to go before they get down to their next line of support. We've made it through, and we've got into this massive zone of lack of support. Hold on to this trade. This ended up being a massive monster trade for people. This saved a lot of people's day. This made a lot of people's day much greener. A lot of us didn't take the trade at all, but this is my highlighted trade of the day. I wasn't in it, but we saw it. If you were in there, if you know, you know. We talked about this trade the entire way down, all the way down to almost the exact bottom of that move. We missed the exact bottom by a couple cents. What is that? 15 cents? 16 cents? Sorry. But beautiful, massive, 100+% winner by a lot. And then we bounced and we came back up. Once again, same rules, guys. We were trending up for the time. Call it a bear flag, call it whatever you want. Do we jump in simply because we broke the uptrend? No, you got to make sure we clear some supports. And it's more than that, though. Even if we break support, where's the next support down? Here. So naturally, I get asked, well, Jimmy, when would you buy puts again? Okay. The thing about me is that I'm trying to not trade under the guise of what if, right? Many people look at this and say, okay, well, great. The uptrend officially ended because we closed below the line. Awesome. Should I take puts now? I say no, because there's too many higher lows in this move up that I'm worried about being able to have a clean move to get through all those. I don't know if we're going to break through these supports or not. And nobody does. But I have to believe that any one of them has the potential to be strong enough to stop the move from continuing down. We watched it happen. Okay, we closed below the support. We knew the next one wasn't far below. It was right here. We hit it. We bounced off of it. We then closed below that support. Well, we knew the next one was right here. That's where we were aiming for. But it's not enough to go from here to here, especially if you waited for the candle close. There's not enough room. What if it holds? Too many people say, but what if it doesn't? The problem is it could go either way. I choose to wait for a place where there is potential for cleaner moves. And that is why when we got down here, we were coming off a lower high for the first time in this move down, by the way. I expect support to fail, not hold. That's why there's an arrow here. Now, why is there an exit here? Probably has to do with the SPYs. Let's go, or Qs. Let's go look at 1142 on Qs. Okay, Qs had broken through their double bottom here with a candle close. Did we get in at 1137? No, 1 minute later. So we waited for SPY to break this support before we got in. Qs got in 1 minute earlier. Okay, and then the Qs made it down to, where were they at 1142? 1142, right down to their support, right here. Does it hold? I don't know. Does it move down from there? I don't know. Eventually it did. But I do know that if you got in at 1138 or 1137 on the Qs or following SPY, there was room to go from one line to the next. Which one holds, which one doesn't? That's the key. Nobody will ever know. But we did tell everybody, and that's why there's an alert here. Guys, I have to believe that if we're able to close below 541.49, we're likely to continue down to the next support at 540.30. It took a while, and it was uncomfortable to hold at times, but it got there. Also a nice trade. But the point I'm trying to make is we waited for a cleaner opportunity to do it, and the move got much cleaner after that to the downside. Look at how many green candles exist between resistance and support when we hit it on the Qs versus how many green ones exist on the way down to the point where we finally got in. Okay, same thing with this. Look at this. Not a single green candle to be had in that entire move. That was a beautiful trade. All right. After that, and by the way, I'm sure some of you are wondering, and for those of you who weren't in the charting session this morning, why are these orange lines dotted? These are 50% retracement levels. For those of you who don't know, when I get a gap larger than $1 between support lines or resistance lines, I find the 50% point between those two lines. You may not realize how often those work and how accurate they can be. I'm here to tell you it's an important level usually. And that's where that line comes from, and that's why it was a target. We used it as support several times until we closed below it. Once we got below it, we continued down to the next support, so on and so forth. We didn't make it all the way down to 538.42 yet, but in after hours we did. So earnings are going on. I was gone. I got out right around 12:40 to take lunch. So I didn't get back till about 1:40-ish. And when I came back, we were putting in higher lows. What is off the table when we get to higher lows? I know I'm not supposed to talk about the chart after 12 o'clock, but we did call out one more trade after this. Okay, so I was trying to explain to people. Puts are off the table. Puts are off the table with higher lows. Okay, well, where should I buy calls then? Well, first of all, off of support, okay? Whether it's a trend line or a developed support, because we were talking about this support right here. Let me draw it for you real quick so you can see it. I'll make it white. We get up, we start to wedge. The wedge did not break high, but we had a solid support. So no puts until we can get below this guy is what we were looking for, if you're looking for puts. Otherwise, we're putting in higher lows or holding support. This would be an aggressive time to get into calls, or wait till we get above the next line of resistance, expecting it to go to the next resistance. It did exactly that. This was another trade that we talked about way before it happened. Somebody asked me specifically, it was a new member, said, Jimmy, would you buy calls here? I said, well, we closed above resistance. It's treating it as support. So yes, this would be an opportune time to buy calls. I'm not going to do it because it's after 12 o'clock. Where I'd be looking to go first is this resistance right here, because it's the next one up above that yellow line. That's why this exists. Ironically, we gapped right over it and continued to the next target high. And then after we got above that, to the next target high. Until we start putting in lower highs. Puts come back, calls come off the table. If we get below this support, I expect we're going to run down to the next support. It happens all the time, guys. Now, we were playing for fun today, trying to guess where we were going to go into the close. And right around this time, I said, I guessed all the way up here at 544.48. Much to my surprise, this thing immediately started to rocket ship up, which was amazing. Nothing I would have played anyway. Then the 350 candle came and down we came. But with that said, we're not going to talk about that stuff because I don't trade that. But if anybody got some useful information out of this video, please like, share, and subscribe. If you'd like to join our Discord community, well, we'd love to have you. I really appreciate you guys watching this. I wish YouTube would put me in front of more people simply because I think I have useful information to share. I'm not selling the idea that you're going to get rich overnight. I'm not putting pictures of Ferraris and Lamborghinis in my thumbnails, and there's a reason for that. And I'm also not doing this face because I don't like clickbait. Okay. I'm genuinely here trying to teach you how to use the market to your advantage. Now, the ultimate test is not understanding the technicals, it's getting past the emotional side of trading. I could teach you all the technicals in these videos, and that's why I make these videos. The emotional side of trading is the hard part, and that's the part we cover a lot of throughout the day in our Discord community. It's not just the technicals, guys. We talk a lot about the emotional side of trading, which is something that a lot of people don't get into, right? And it's the most important thing to talk about, because if you don't have your emotions in control, you're going to lack the discipline, you're going to lack a trade plan, and you're not going to know what to do when certain things happen without panicking. There's no room for panic in this job, in this business, okay? So if you like what you get in these videos, it just gets expanded upon beyond the technicals in our community. Please join us for the week for free. You don't have to put any money into the market. You don't have to put any money into being a member. Just use this information. Hear what we're about. Maybe it will be helpful for you. That's my hope. All right. So again, thank you for watching the video. I hope you all did great today. Till tomorrow, I love you guys.